Hello guys, welcome to another episode of Robinhood Portfolio. Today the portfolio is up $87 and in the after hours I am down $75. So we can look at the Robinhood interface and we can see that some things have changed. The graph looks much more spread out now. It doesn't look as close in view as prior to my other videos. The whole interface has changed with the Robinhood Portfolio. We can see at top that it says investing, and it shows my total portfolio account, $14,681. I'm just going to quickly talk about what stocks I've owned, what have I been doing for the past couple of months. For the past 3 months, we can see that I am down almost $1,100, guys. The stock market has been very volatile. There's been a lot of volatility in the markets, but I like to think of myself as an investor. Again, I don't like to start getting crazy and start trading just to be trading for the sake of trading. I like to buy and hold. I do sit there and I do try to watch those Warren Buffett videos. I watch other people's videos too. I just try to get like an insight on the market. I look at my Seeking Alpha reports, and this is going to happen. You have to expect drops like this. Sometimes you get buck wild. You start investing in FANG stocks. You start investing in the growth stocks like MasterCard, Visa, all the growth stocks, but they just continuously go down. And you think that you're doing something wrong when you really aren't. Those are very good companies, but again, the rational of the market, sometimes the market can be a little irrational, and stocks going ahead and they go through their corrections. But again, one quick thing I want to talk about is Robinhood banking that recently debuted today. Robinhood announced Robinhood banking, which is quite interesting. They're going to be offering debit cards that yield as much as 3%. So checkings and savings account that yield as much as 3%. So how do I feel about that? Well, I do like 3%. That's really good. That's a really good yield percentage as far as the whole banking is that the whole banking is concerned. I'm losing my words here, but so this is what it is: checking and savings. I actually did sign up for it. It did pique my curiosity, but one thing I do not like about this 3% yielding checkings and savings account is, I don't know how the Robinhood the support center goes. Like I tried. Sometimes I try contacting them, and I don't get like quick responses back. So if something happens to my debit card or something like that, I don't know how that's going to play out. I'm going to sit up there and I'm going to be contacting Robinhood through email. I'm going to be trying to call the number, and it's really, really difficult to get a hold of Robinhood because they're so busy, I guess. But I try emailing them and they do respond to emails, but I don't know, guys. I'm gonna go on ahead and try it out. It sounds too good to be true, and it probably is. But if it is indeed something to just take a look at and everything works out, it really will kind of just start replacing those low dividend bank accounts. The Bank of Americas of the world that offer only like 1% savings. That's just not even 1%. I think they offer like 0.000001 savings yield. It's just crazy. I don't know about that. But let's go over my stocks. Enough talking. We have Apple down. Average cost 171.29. Average shares 10. I think my last video was 173. This is down $9. You know what? I don't care. Apple's Apple. They're not going nowhere. If I'll average down more if the stock gets down to like $150. I like Apple a lot. There's some concerns about their China growth. Whether or not Apple can even sell iPhones in China. I read a report on that, but Apple's not going nowhere. I like Apple. Apple's here to stay. Costco, down on them. Actually, they just revealed an earnings report today. Down $25. Average cost $221 for 10 shares. Costco is the largest holding in my portfolio. That's why I'm so down on them. Total today's return amount is $88. So I know today that they announced an earnings report and they missed on Wall Street expectations. So I guess that's the reason why the stock is down. But they actually did very well in revenue growth, which was surprising. There's a lot of scares about Amazon and this and that, but their revenue growth should continue to do well. The memberships should continue to do well. And the market just closed. We just see the screen turn black. But I'm very long on Costco. I like Costco a lot. New stock in my portfolio is Disney. So why is Disney here? I have sort of banned utilities and energy stocks from portfolio because I have some of those already in my Roth IRA. Being a pipeline is putting in work, and then it's giving me monthly dividends. And I have SPHD, which is very high on utilities. So it has a very large holding in utilities. So I said to myself, I don't need utilities and energy stocks in this portfolio. I need something like a Disney that gives me more diversification in the entertainment business. I didn't have an entertainment stock. I guess Apple is sort of like an entertainment stock with like Apple Music and Apple iTunes and this and that. But Disney is the one of the better entertainment stocks in the portfolio. As you guys can see, average cost 113, 10 shares. And I'm actually up with them $2. But the real reason I bought Disney is because they have a very, very strong outlook for 2019. They're starting a stream service. They have Aladdin coming out, Aladdin that's made by Disney. And they have The Lion King, which is very anticipated movies coming out. They own Marvel, so all Marvel movies would do good. It's just a really good stock to look forward to in 2019. I think this stock is undervalued for its current position right now. And in 2019, I believe that we could probably see the stock go over $130. So I want to get in early. I like Disney. I like what it does for a portfolio. Very good blue chip stock. I wish they paid their dividends a lot more, though. They only pay their dividends twice a year, which sucks. So I don't like that. Johnson & Johnson, 147. My average cost is 145. Amazon Healthcare, nothing left to be said. I love Johnson & Johnson a lot. I really didn't waste no time with Johnson & Johnson because everybody knows how I love Johnson & Johnson. McDonald's is doing very well, even in the last correction, in an October correction, and even all the way into November correction. McDonald's has been doing very well. $213 return, up 12% on them. Average cost looking good. I'm going to hold this stock for a very, very long time. I really like its diversification. Discretionary services, diversified industrials, 3M, doing very well. My average cost kind of went up because I've been switching the money out. I think the average cost in the last video was 197.27, but this one I only have 5 shares. Why people are saying, hey, why are you selling 3M? Well, the reason why is because I'm not really sure how this trade war is going to play out, and I know like if there's bad news in the trade war, the stock is going to tank. But I really want the stock to go back down to 187 anyway. So, I'm gonna hold 5 shares, and if it goes down to 187, I'll buy another 5 shares and lower my average cost a lot. So I stand to gain either way. If the stock goes up, I'll win, and if the stock goes down, I'll buy more shares with my buying power. So 3M diversified industrials, I like 3M a lot. So the next stock in my portfolio, Microsoft. I'm back into Microsoft. So there's 2 tech stocks in my portfolio now, Apple and Microsoft. I said before I like Microsoft a lot, and I don't mind them being in portfolio, but that average cost is really, really high, 108.93. That's really an eye-opener there. But again, looking at the price of the stock is not enough. As Warren Buffett says, you can't invest just based off looking at the price of the stock. That's not really investing. Sometimes you have to, trade off the fundamentals of the company, and Microsoft has very, very strong fundamentals in cloud-based software, and there's been several reports reported on my Seeking Alpha reports that they're going to take over Amazon soon. Well, not take it over, but they're going to pass Amazon in the cloud business. So Microsoft has been around, blue chip stock. Their dividend, they're increasing that dividend. This is a no-brainer here. I could put some money in Microsoft and just hold it forever. Procter & Gamble up with $97 97.17 today. My average cost is $93. I like Procter & Gamble. I think it's one of the better consumer staple stocks on the market. Very safe. But they recently had a giant dip. This graph has really changed. Like I don't like it a lot because it really doesn't show like it's good, I guess. It's kind of good. It does show that the stock is like getting hit bad, but it just seems like stretched out. I don't know. It just looks weird. But I like Procter & Gamble a lot. One of the better consumer staple stocks on the market. Visa, I'm down on Visa, $13. They're a growth stock. Costco and Visa are my growth stocks. It gives the portfolio some offense. I don't want my portfolio to be so defensive. I want some growth stocks in here, so I put in Visa. They're growing every day, and everybody has a Visa card, and they're using their Visa card and MasterCard and whatever. So, they're increasing that dividend. I know it's low, but over time, I expect that dividend to go up to like 75 cents or a dollar or something like that. Very, very interesting stock. Verizon is the last stock in my portfolio. I've been buying Verizon again up like crazy. The thing is that I'm buying into the high again. So again, I'm trading. I'm sort of trading off the fundamentals of the company. I like Verizon's balance sheet a lot better than AT&T's. Even though I know AT&T said that they want to focus on getting rid of the debt, and Verizon. I think I won't buy back into Verizon unless it gets to like $50 or something like that. But I wanted 25 shares because, again, I think the dividend yield is just sitting well over 4%, and it's going to pay me a really, really strong dividend as long as I hold on to my stocks. But sometimes I do take the money if the stock gets high enough, and like right now the stock is tanking. But you see right here, November 27, 2018, the stock got all the way up to $60. So you have to ask yourself, what do I want to do? Do I, instead of waiting for a dividend and do a dividend capture, do I take the money and then, put that money to work elsewhere? But, the thing is that it's really, I usually, what I normally do is I try to buy low and sell high, especially for stocks like this, because I know that they're going to, trend back eventually. So, I do take the money instead of capturing the dividend. So that's going to do it for my portfolio, guys. 10 stocks. I have banished utilities and energy stocks because I have that in my Roth already. But I really like how this portfolio is set up. I know I'm really down in the after hours, but that's only because Costco decided to tank today. But I really like Disney going forward. I think they're going to be a very, very interesting stock moving forward. And again, those Disney movies and the streaming services, they're pulling all their content off Netflix. And a stock like Netflix, that they have all the the Star Wars stuff on Netflix, but Disney's gonna pull that off of there soon. I just like Disney a lot for 2019. I think this is a very good play here. But yeah, guys, that's gonna do it. I know I'm down in after hours. The after hours is kicking my butt a little bit, but yeah, 10 stocks. Let me know what you guys think of my portfolio. Comment, rate, whatever. And I guess I'll see you next time.